a lot of software companies who are basically into export of services. And you have few manufacturing and trading concerns who are into export of goods as well. So therefore, they have a lot of issues in claiming GST refunds from the central government, from the state government. If you actually read the act and the rules, it is all well drafted. It says that so-and-so authority should give refund within so-and-so time limits and all that, but practically nothing is being followed. So in this particular study meeting, what we will understand is that first we will brush upon the existing provisions of the refund section of the GST law. Right? You have section 54, which is the mother section, which talks about refund, and then you have the supporting rules, right, from Rule 89 to Rule 97. And these are all a part of the CGST Act and CGST rules of 2017. The first part of the presentation. The second part is that, and that is the body of the presentation, we will understand and study what are the requirements of filing a refund application. What is the procedure? What are the documents to be uploaded? And why I have themed this study circle as complexity and simplicity is because GST refunds is completely online. All circulars and notifications tell that GST refund it should be completely online. There's no physical mode ever existing in GST refunds. But at the same time, you have the amount of time, effort that goes into filing a refund application for a small or a big service or a good exporter is quite cumbersome. And that is why it's starting to, or it is already complex. So in the second part, we will come across the requirements of filing a application, a refund application. And finally, in the third part of this presentation, I'll take you through a show cause notice, which is, I've come across that notice to be the best show cause notice I've received, the client has received. And that show cause notice, the officer has actually stated the rule, the act, the notifications, the circulars, and what all are the documents and the conditions that you should comply with before filing a refund application. One important note is that under refund, you have so many categories, right? You have refund of IGST paid on export. You have refund of something called as unutilized ITC. You have refund to UN bodies, refund of excess payment of GST, refund of the balance in the cash ledger. But because of the paucity of time, I will restrict all my discussion and conversations to just one part of refunds, that is zero rated supplies of goods or services or both. So as stated earlier, the mother section of refunds is section 54. You have approximately 12 to 13 subsections or under section 54, and you have many clauses and subclauses under that. And the refund forms, the procedures are all prescribed in rules 89 right up to 97. And these are all contained in the CGST Act or CGST rules of 2017. So before we brush up the provisions, one important fact to understand here is that ultimately the objective here is to get the money into your bank account and to prove to the GST officer, whoever is looking at the application, to prove that you have not passed the burden of CGST or SGST or IGST and that you are eligible to claim refund, not anyone else. If you have passed the burden to a supplier or to a recipient, the supplier or the recipient is bound to get a refund. So in any application, be it for zero rated supplies, be it for balance of cash ledger, be it for excess payment of a GST, ultimately you'll have to prove that you have not shifted the burden to the other person. As again discussed before, refund, you can claim a refund of what? IGST that you pay on exports, that is, you are basically supplying goods and services outside the country. You can claim refund of the unutilized input tax credit lying in your electronic credit ledger because you are exporting services and goods. And there's a concept called inverted duty structure, which is a big concept in itself. Probably we need one more study session to understand the refund mechanism in inverted duty structure. And then, yes, you have whatever is the balance in your electronic cash ledger. If you're winding up your company and you have some money in your cash ledger, why not? Let's claim refund. And then you know, by mistake, you paid CGST instead of CGST and SGST instead of IGST. Then what you need to do under law is first claim a refund of CGST and IGST of what you paid wrongly, and then pay IGST after claiming the refund. So that is excess payment due to a mistake. And others could be to a casual taxable person because they have to deposit tax in advance if they get refund. Non-resident taxable person. Then you have refunds to UN bodies and all other types of refunds, which are quite rare. And we sitting in our offices don't come across those kind of situations. So I will restrict my scope to zero rated supplies. So we'll try to understand in the next few slides, how do you claim the refund of tax, which is basically IGST, in case of zero rated supplies. Now, what exactly is this zero rated supplies? It is not exempted supplies. It is supplies which are taxable but at zero rate, in simple words. If you want to find out the legal provisions, it is under section 16 of the IGST Act, which defines what is a zero rated supply. It has two wings. It is either the export of goods or services outside India, or it is the export of goods or services within India, but to a special economic zone, because a special economic zone is considered to be a unit which is as good as being outside India. And therefore, the government has said that yes, for these supplies outside India and to special economic zones, you have basically nil rate of GST on these supplies. So again, you have two broad classifications under this, and when you come to refund. So I'll explain what do you mean by zero rated supplies. Under zero rated supplies, you can claim refund in two situations. You can claim the refund of IGST that you paid on zero rated supplies, which basically means that tomorrow you are sending out goods and services outside India on the payment of tax, where your tax is going out of your pocket because the other guy will not pay. In that case, you can claim a refund of whatever IGST that you have paid from your pocket on exports, be it outside India or to special economic zones. The other refund type is that you are not levying and you are not paying GST. You are obtaining something called as an LUT or letter of undertaking. Under GST law, it is still mentioned as LUT/bond. I've not seen bond in the GST application, refund applications till now. So it's high time they remove the term bond, because bond was the concept which is existing in customs law. In GST law, yes, it is there in the law, but practically, when you file a refund application, you don't see the word or the format of a bond anywhere. So the second type is refund of whatever is the ITC lying in your credit ledger, which you're not utilizing because you're not levying IGST or you're not paying IGST. So you get a refund of unutilized ITC, and you can get a refund of IGST. Both these are mentioned in the mother section, section 54. It is mentioned not in one subsection, but it is mentioned somewhere in section 54. And therefore, the government says that yes, for these two cases, either one, of course, you can get a refund claim or whatever is the ITC or tax that you're claiming. Another concept given under section 54, subsection 14 is about relevant date. Now, this is again a problem why many refund applications get rejected, because the SSCs are not aware of what is the relevant date or what is the due date within which I should file a refund application. So specifically with respect to zero rated supplies, I have divided into goods and services. Because you see, for export, for zero rated supplies of goods and services, it is too different. The time limits are different. Section 54, subsection 2 says that you must file a application for refund, be it for any category, within 2 years from the relevant date. Subsection 14 explanation talks about what exactly do you mean, what exactly is the relevant date. So relevant date is explained for each category of refunds, and specifically in our discussion today, we will restrict the understanding of relevant date to zero rated supplies. So as you can see on the PDF, as far as goods are concerned, this I'm talking about zero rated supplies when you pay IGST. That is, you're paying IGST and then you're claiming a refund of the IGST. So if you're exporting goods, then it is 2 years from what? It is 2 years from the date the goods leave, the goods in the vessel leaves, or the goods in the aircraft leaves, if it is through sea and air. If it is through land, then of course, crossing the customs frontiers of India. If it is to post, then the next day after dispatch of the goods would be the first day of the relevant date. So 2 years from that date. As far as services is concerned, on your left-hand side, you can see that sometimes when we provide services, we get the payments for services, we get the payment sometimes in advance, which happens most rarely, or we get the payment after supplying services outside India. So in case of services, if you're getting the money in advance in dollars from the customer sitting outside India, then 2 years should be counted from the date of invoice. But if you're not getting the payment in advance, if you are supplying services, then after 2-3 months, you're getting the payment from outside, then it should be from the day you receive the payment plus 2 years. So you get more time, basically. So this 2 years concept is very important because it is the first indicator of, or it is the first criteria or the first point of rejection by the GST officer when you file a GST refund application. On the right-hand side, it is zero day supplies without IGST. Basically, you are exporting under LUT or supplying to a special economic zone under LUT. You take goods and services together, it is due date from the time, from the end of the tax period you file GSTR 3B. Earlier, I guess before the Amendment Act came, it was 2 years from the end of the relevant financial year, which means from 31st March of the relevant year, you get 2 years. But no, they have sort of curtailed this time limit, and they have said, when you're claiming a refund sitting in March, it is basically 2 years from the due date of filing GSTR 3B for the month of March, which is 20th of April. So this 2-year concept is important, both for zero rated supplies on payment or without payment of IGST. Coming to the next one, the section, rather, the Rule 89 talks about how much should be the amount of refund claim. The section says that the SSC should claim refund as prescribed in Rule number 89, sub-rule so-and-so. So under Rule number 89, it gives you what should you claim as refund? What is the amount? So again, 2 categories. If you're paying IGST on zero day supplies of goods and services, then nothing to think about. Whatever IGST that you pay, you get refund. Now, one question that can arise here is the fact that you definitely will have some input tax credit when you're at the time when you export, and then you're deciding to pay IGST on export. You can very well set off whatever is the input tax credit lying in your electronic credit ledger, right? Suppose 5 lakhs is the IGST that you should pay on exports, and 1 lakh is the ITC that you have in your ledger. You can set it off, and 4 lakhs is what you pay to the government as IGST. Although there's no need for you to pay, but you've chosen to pay IGST. So what do? You claim the entire refund of 5 lakhs, not 4 lakhs, even though you have set off with 1 lakh. You claim the refund of 5 lakhs and you will get 5 lakhs, subject to the fact that you follow all the conditions for refund application. So ultimately, whatever tax that you pay on an activity which is beneficial for the Indian government being export, you should get that tax paid into your bank account. As far as zero day supplies without payment of IGST under LUT is concerned, there's a particular formula, and this is where the complexity lies. There's a particular formula prescribed under Rule 89. I guess 89 sub Rule 3 specifies the formula on how to compute the net ITC, because under without pay IGST case, you're basically claiming the refund of unutilized ITC. So Rule 89 sub Rule 3 explanation talks about the formula which you should follow, which you should use to compute how much of ITC that you should put for claiming of refund. And that is in 89 sub Rule 4 of the CGST rules 2017. Right. So as discussed here, you have one without formula, that is the entire IGST amount that you can claim as refund. And secondly, you can claim refund of unutilized ITC. So in the next slide, I've given the formula on how you should compute this unutilized ITC, which you can avail as credit, or avail as refund. So this is the second point for rejection of refund application by the GST officer. The first one, of course, the fact that you have not followed the criteria of relevant date. Second is your computation of whatever you want to claim as refund is not correct. But if you come to the practical scenario, mostly all companies will be either companies who are dealing only in goods or companies who are dealing only in services. And therefore, for them, this particular formula will be quite easy, because ultimately their entire turnover is turnover of services. And you see the denominator is again turnover of services. I'll come to that. But for a company who are both engaged in domestic and export, or for a company who are engaged in export of goods and services, this formula becomes very relevant and confusing. So as you can see on the PDF, the refund amount is equal to, on the numerator, you have two turnovers: turnover of zero rated supply of goods and zero rated supply of services. You add that together, you get your total turnover divided by adjusted total turnover. Now, this is again something which is only prescribed or only mentioned in this section of the GST law for refund. Adjusted total turnover, something like your adjusted gross total income in income tax, right? And that bracket you multiply with net ITC. So ultimately, what you get from here, you are multiplying whatever is your ITC lying in your electronic credit ledger for which you want refund. You're multiplying that with a numerator and a denominator, for which we will look into the details in the next slide. Because there is a further breakup of the turnover, as you can see on the numerator, and the adjusted turnover in the denominator. So net ITC, the final amount is called net unutilized ITC. That is what you're claiming as refund. But for companies who are involved in the supply of goods and services of both domestic and export, you got to work this out, this formula out, and come out of this confusion. So if you come down, I have further broken down the formula into the components. This again is something which is mentioned in Rule 89 sub Rule 4 of the CGST rules 2017. The numerator, or we'll first start with the multiplier. The multiplier is basically net ITC. What is net ITC? In simple words, ITC that you have in your electronic credit ledger of inputs and input services. Mind you, you cannot take ITC of capital goods. Why? Because it is clearly mentioned, the definition of net ITC in this particular sub rule excludes capital goods, which means, what is the logic behind exclusion? Well, capital goods has a durability and usability of more than the more than a particular amount of years, and therefore you are buying capital goods, you're capitalizing that, and then you're claiming credit of the tax that you paid on that. Government says no, that is not possible. Capital goods are capital goods. You capitalize it and claim depreciation on that, but I will not give you another benefit in the form of ITC, because these goods are meant to be used over a period of time, for a long period of time for the business, and therefore inputs and input services keep rotating for the business, and therefore I will give you the refund of the ITC that you incurred or the tax that you paid for inputs and input services purchase, but not on capital goods. So if anyone is making an application wherein you are adding ITC on capital goods and then calculate net ITC, it is wrong. This is the third point of rejection, where the officer can tell you that you can only avail ITC on inputs and input services. In fact, when I come to the show cause notice of that particular person, I will tell you that that person has in fact added the ITC on capital goods. And that was one of the reasons for the rejection of refund application. Coming to the numerator points, you have turnover of zero rated supply of goods and turnover of zero rated supply of services. As far as goods are concerned, as you can make out from the word itself, turnover of zero rated supply of goods basically means that whatever you are including, that is the value of goods as a part of zero rated supply of goods under LUT comes into this bracket, right? There's no second thoughts about it. Whatever is the value of goods that you're exporting under LUT outside India or to a special economic zone, that is turnover of zero rated supply of goods. Confusion comes in turnover of zero rated supply of services. So this, we are still in the numerator. So what exactly is turnover of zero rated supply of services? You can see that particular bracket. You have to add two things and subtract one thing to arrive at this turnover. What normally SSCs do is, whatever is their turnover as far as services are concerned, they add that or they account that for net ITC, which is wrong. You need to understand the formula prescribed in the rules, and that formula should be understood and then taken. The figures only pertaining to those components should be taken into consideration. So turnover of zero rated supply of services is nothing but the aggregate, or you can say you're adding two items. What are those two items? Whatever are the receipts that you have received for the supply of services, right? That is, you have exported services outside India. You may have exported services outside India in the last year. You may have, or you will export services outside India in the next year. Irrespective of when the supply is, whatever is the proceeds that you receive into your bank account in India, that you add first. To that, you basically add the value of supplies. Value basically, as per section 15 subsection 1 of the CGST Act, you determine the value. It's called, the chapter is valuation, where you determine what is the value of supplies for which you received advances previously, which basically means that today or for the relevant period, you are supplying services for which you already got the advance in the prior period. That you added. But you deduct one thing. Whatever is the value or whatever is the advances that you received or the proceeds that you received this year, but against the supply of services that will be done in the future. This is basically to find out what is my value of services in respect of zero rated supplies strictly to this particular relevant period for which I'm claiming refund. So I add all the receipts irrespective of the time of supply. I add the value of supplies for which I have received advances in the prior period. I deduct advances or proceeds that I have received for something which is to be supplied in a later period, because it basically is not pertaining to this period. And that is how I arrive at the turnover of zero rated supply of services strictly relevant to this particular period for which you're claiming refund. So that completes the numerator, where you have two components, and then you have the multiplier. Coming to the denominator, which is adjusted total turnover, I'll take you back to the formula. So we have completed these two, which is basically adding up your numerator. We have completed the multiplier, which is quite easy to understand. One rider is that you cannot take capital goods ITC into account. And now we'll come on to the even more complex denominator, the adjusted total turnover. Well, again, sub-rule 4 of Rule 89 talks about how you should compute adjusted total turnover. It is not to be computed as per your own wish, as per what you feel is adjusted total turnover. it is to be strictly computed as per the rule or as per the formula given prescribed under the rules. Adjusted total turnover is the aggregate of four things. Here, unlike the numerator, you had separate segregation for goods and services. In the denominator, you have to combine the value of goods and the value of services together. So adjusted total turnover is the aggregate of, you can see the first component, turnover as defined in section 2, clause 112 of the CGST Act 2017, excluding turnover of services. So the first component is turnover as defined in section 2. Now, what is the definition as per 2 clause 112 of the CGST Act 2017? It talks about what is the turnover in the state. The definition as per 2112 is turnover in a state. It basically includes all your taxable supplies. It basically includes all your exempt supplies. When I talk about exempt, it is 1, nil rated, 2, partially exempt, 3, wholly exempt. So it is A, your taxable supplies, plus B, your exempt supplies, plus your export services, right? You're exporting outside India or to SEZ, it includes all that. It does not include non-GST turnover. That is, you're exporting some goods or services which is not even a part of GST, like petrol or whatever. That will not be taken into this turnover definition. So it's basically taxable turnover plus exempt turnover plus export turnover. Your RCM, inward supply value, all will not be included in this one. So the first component is turnover as defined in 2 clause 112, excluding turnover of services. So total turnover in the state minus services is equal to goods, turnover of goods. So the first component here is they're saying that my total taxable turnover, my total exempt turnover, my total export turnover of goods. Why? Because they are saying you're excluding turnover of services. So this first component is done. Second addition, or in fact, second, third, and fourth one are relating to services. The first one related to goods. Second, third, and fourth are relating to services. It says to the goods turnover, you should add the turnover of 0 rated supplies of services, which you have found out in this step. This is the step in which you have found out this particular numerator. That is what the first component of service that you should add, or rather the second component in adjusted total turnover. I've given you a refer above, which is basically this particular component is what you have to add to the first component. The next one is taxable supplies of services, because the above one is 0 rated supplies. The next one is taxable supplies of services. And here you have an exclusion as exempt supplies, because if you do not deduct exempt supplies, then it is assumed that exempt supplies is a part of the total turnover in the state of services, therefore it will be clubbed together. So specifically, the rule has deducted value of exempt supplies, because it is not right for you to claim ITC in respect of such supplies. You have to basically claim ITC of 0 rated supplies, which are basically taxable. 0 rate is nothing but taxable, but at 0 rate, and other taxable services. So coming back to adjusted total turnover, it is the aggregate of 4 components. The first component is relating to goods, where it says that take the total turnover in the state, that is total turnover of taxable, exempt, export of goods. Why? Because they have said excluding turnover of services. The second, third, and the fourth component is relating to services, where you add the turnover of 0 rated supply of services, as we have read in this particular step. To that, you add taxable value, which is basically your domestic supplies of services. And to that, you deduct exempt supplies. And therefore, you will arrive at adjusted total turnover. Only after completing this step will you actually get all the requirements that you need for this particular formula. And then only can you calculate in your working paper the total refund amount. So I don't know how far this is possible for a SSE who does not have prior knowledge of Rule 89 sub Rule 4, but it is extremely difficult to sort of interpret and find out and read between the lines of this formula. So once more, the refund amount that you're claiming is basically net ITC multiplied by the numerator, that is the total turnover of goods and supplies zero-rated, divided by the denominator being adjusted total turnover. So if a company is having domestic and export, using this formula, they will be able to find out what is the adjusted ITC that they can claim as refund. If a company only has turnover of services, then tell me that the numerator and the denominator will be the same. Because ultimately, a company only, that particular company is only, they only have export of services outside India, and that is the only source of revenue or only source of supply. That is the only type of supply is exports outside India, and that to services. And therefore, for those type of companies, you have the numerator and the denominator to be equal, right? So whatever you claim is ITC, you are claiming 1 lakh as your net ITC. 1 lakh into numerator denominator same. Ultimately, 1 lakh is your refund amount that you're claiming. Whatever is the ITC that you had in your on your refund your credit ledger, that is exactly what you're claiming as refund, because your numerator and denominator in terms of are same, because of companies involved only in the exports of goods or services. So this completes the refund claim formula, and therefore the major important parts of section 54 pertaining to zero rated supplies are completed. Coming to the rules, now a lot of wanted or unwanted stuff is mentioned in the refund rules. You know, a lot of things when I in fact read it in detail, there are so many things that the officers are not, adhering to. You have a time limit of 60 days within which you should get your refund. Now tell me, you may have so many cases in your office or in your colleagues' offices, wherein a refund application is still under the processing stage. It is short over 60 days. You are supposed to get interest and all that, but it has exceeded 60 days. So in one particular page, I have sort of summarized the entire procedure, and I will take you from step 1 to the last step on how this procedure, how it's basically, for the SSCs, it's something of a reference material for the consultants, but for the GST officers, this is something that they should strictly follow, which unfortunately they're not following as per the rules. It starts with RFT 01. RFT 01 is the common refund application form. In fact, I have a copy that I want to show it to you. After finishing up this PDF, I will go on to a sample RFT 01. It is the refund application format in which you should enter the details and apply for a refund. It appears to all category refund. The starting step is always RFT 01. And these are all mentioned in the rules from rule number 89 right up to rule 97. The second step is RFT 02. Now, as soon as you upload your refund application, because everything is online now, if you're a company, then you need to insert your DSC. If you're a firm or a non-company for that matter, an EVC or an OTP will work. So once you file that, you'll get 2 PDFs, right, as an acknowledgement. One is a RFT 02. RFT 02 is basically an acknowledgement bearing a number called the acknowledgement receipt number, or the ARN. It's basically a tracking number that you can use to track under which stage your refund application is, whether it is still under the processing stage, whether it is still under the scrutiny stage, or whether it is the order has been sanctioned, or whether your payment advice or payment order is pending. So RFT 02 is again a common acknowledgement for all types of refunds, right? The time limit mentioned in the rules is 15 days from application. Today, if I apply within 15 days, I should get the acknowledgement. But practically, today I make a refund application. Then and there, I will get an ARN number with a time gap of 5-10 minutes. I will get an ARN number. That process is quite quick. That's a good thing done by the GST portal or the GST department. You will get the PDF bearing the ARN number and the amount of refund that you have claimed and the bank account details that you're furnished for getting a refund and everything. And that is what we basically check if everything's okay, and then we send that to the client, and that is how the client comes to know, or the SSC comes to know that, okay, we consultants have filed a refund application, and this is the ERN number. Either the SSC can track using the ERN number, or the person filing the refund application can track. I'll in fact show you an RFP02 at the end of this presentation. The third one is quite common these days, and that's called a deficiency memo. Now, the first time when I did a refund application and I got this memo, I was quite, I did not know what this represented. And then I went back and saw that, okay, there's this thing called deficiency memo. It is not a deficiency notice or a show cause notice. It's just a memo by the GST officer. The name and all of the officer will be there. It is just telling you that, hey, the application that you filed has so many errors. Please correct it and file a fresh GST application for refund. A fresh application for refund. Mind you, it is a fresh one. Once you get a deficiency memo, you cannot file a revised, like how you do a revised GST registration application or a revised return. Of course, GST returns you cannot revise. I'm talking about Income Tax Act. But if you get a deficiency memo, you cannot revise it. You will have to start from square one. From the first step, you'll have to make a fresh GST application, right? Because when you receive a deficiency memo, it means your old GST refund application is cancelled, right? Your refund is not rejected, but your refund application is cancelled and they've issued a deficiency memo. Again, it is something that the department can improve on. I don't know why they want us to again file a fresh application all over again, attach all documents, give all, put all this formula again. They can, issue the deficiency memo and ask us to file a revised application within so many days, which is not the case right now as per rules. RFP 03, deficiency memo. Again, a sample I will show you at the end of the presentation. RFP 04 is again, it's quite rare because I have not come across a case where a client or the SSC has received provisional refund. Yes, there's a concept of provisional refund. You file refund application. If you have given a declaration that you have not committed any offense in the last 5 immediately preceding financial years above an amount of 2,50,000, if I'm not wrong, then the GST officer may give you a provisional refund. And the good part is the refund amount is 90% of your refund claim. The provisional refund that the department will give you in RFP 04 is 90% of the amount of the claim that you make. So this is again very rare. If you have come across anything, you can let me know. I would love to see an RFP 04 and how it looks like. But then, knowing very well how the cash situation of our department is, this is something that we cannot expect in the near future, at least in the near future. And RFP 04 is something which is just in theory, just in books is what I feel. Because right from after the deficiency memo, it's either a rejection or a final sanction. There's nothing in between of a provisional refund. You get 90% of the refund claim, nothing like that. If you get 90%, then you might as well, you'll be happy and you won't even proceed further. So that is not the case right now. Coming to the next one is RFP 06. Now, if you see the serial number 1, 2, 3, 4, then it is 6 and then it is 5. What is 6? I have sanctioned, the GST officer has sanctioned the refund. And for that sanction, they have passed an order called final refund order, final sanction order in RFP 06. Excuse me. It is the order where either they can sanction or they can reject, right? So that is passed in a form called RFP 06, which is quite rare to find because nowadays, even the final refund amount is taking beyond 60 days, and that for us to see that form RFP 06 will take some time. Then we come to RFP 05. Earlier, this was called payment advice. Now it is called payment order. Through some amendment, I guess it's a notification or an amendment act 2018 or 19. RFP 05 is called the payment order. Earlier, payment advice. Now, why do they interchange the words? Payment advice meant that, okay, if I'm claiming for an IGST, which is the case for zero-rated supplies, the application, the file will go to online to the central officer sitting outside Kerala. Then he or she will pass the payment advice in RFT 05, which is nothing but an instruction to the state tax officer in the jurisdiction in which you have obtained GST registration. Basically, the state tax officer ruling your jurisdiction. It is advised to that person to also check it. And then if okay, pass a refund order, sanction it, and then payment will be initiated. So basically, payment advice was being done before, but after the amendment, the term is payment order, which basically means that if you are applying for IGST refund, it will go to the central government, someone sitting there outside Kerala, most probably Bangalore or Delhi. And the final authority who is assessing, scrutinizing, sanctioning, and releasing the payment order is one person. There is no concept of advice wherein they will then instruct the state officer to check the SSC in the jurisdiction and then release the payment. No. To avoid harassment of SSCs, the government has in fact brought a circular, which I will discuss, circular number 125/44, which instructs the officers that there's no need to pass a payment advice, pass a payment order and get done with it. Then you have an RFT 08, which is again quite rare, because once you file an RFT 01, you get a deficiency memo in RFT 03. You file a fresh application in RFT 01 again you get an RFT 03. Again, you make a fresh application. Again, you get an RFT 03. Again, you make a fresh application. Finally, when the officer is irritated, the officer will pass a show cause notice or issue a show cause notice saying that you are liable. The SSC is the refund amount is liable for rejection. Please show cause as to why this amount is not liable to be rejected. And that is an RFT 08. Fortunately, for a client of ours, we have got an RFT 08. And that is why I'm able to explain that. And we will come to that at the end of this PDF. Right? And finally, you can reply to a show cause notice in RFT 08 in form RFT 09. And the time period is 15 days from the show cause notice. The rule says that right from RFT 01 to RFT 09, or whatever is the forms in between, the final, the maximum period within which you should process a refund, process basically means it should hit your bank account, is 60 days. Now, that is not being followed. I don't know for what reason. I don't know the action taken against that. That is not being followed by the officers. Within 2 months, if I make an application today, from 2 months from today, I should get the money if everything goes correct. But if they are delaying RFT 03, if they are delaying RFT 05, if they are delaying RFT 08, and then it exceeds 60 days, then I guess, there's nothing that we can do because everything is faceless now. And everything is going to the central government, the central GST officer. So in rules, in theory, it is process, the entire mechanism should get done in 60 days, which is not the case. Then coming to master circular. Now, this is not called master circular. I put it in that way. You have for bank audits, masters, RBI circular and all that. But this particular circular, as you can see, this is a 27-page circular. Probably one of the largest, one of the biggest I've seen till date. 27-page circular, which is very clear, given by the Ministry of Finance, Department of Revenue, GST wing, to all the principal commissioner, assistant commissioners, state tax officers, etc. It's a circular, which basically means something to clarify, an instruction given. It is not applicable to us. Yes, they will implement it and become applicable to us, but it's just a reference material to us, for us. So this is a 27-page circular, and I have tried to concise the important points in the circular in 3 slides. This circular is as good as an act or as good as section 54 or rules 89 to rule 97. This circular tells you from A to Z what all the GST officer should do. I mean, it's like a checklist. If he has these 27 pages pasted onto his desk, then it'll be very easy for him to reject the refund application and to follow the 60 days mechanism. So in the circular dated 18th of November 2019, a very famous circular. In fact, it's widely discussed by all the experts in YouTube and in a lot of forums and study circles and all that. So this circular has a lot of headings, a lot of segments. I've tried to bring out the important sections restricting to zero data supplies. Yes, this circular talks about deficiency memos. RFD 03, it should be within 50 days. See, either you get a RFD 02, that is an acknowledgement. Nowadays, you get an acknowledgement and then an RFD 03. But in the circular, it's clearly mentioned that when you file a refund application, you will get one PDF as acknowledgement for filing, not with ARN number. You are supposed to get one more PDF or one more sort of a notice or one more form saying that this refund application is okay, it is not liable for, or it is not, there's no deficiency in this application. Either that or RFP 03, a deficiency memo within 15 days. So from application, in the next 15 days, you should either get a form saying that, okay, there are no errors in your refund application, we will process it further. Or you should get a deficiency memo in RFP 03. Mostly, in most of the refunds, you get a deficiency memo. A sample of a DM, I will show you at the end of the presentation. The only issue with this DM is, yes, there are some errors that you need to rectify, and you need to file a fresh application, which is again a sort of a, it's a big compliance. I would say it's a big waste of time because you have to go back to square one and file a fresh refund application. So that is the limitation of this. And the rider here is that I told you the relevant date is 2 years from the relevant date. So if you get a RFP 03, a deficiency memo, you have to file a fresh application. Say today you file a GST application. In the next 15 days, or on the 16th day, you're getting a refund RFP 03, a deficiency memo. You have to file a fresh GST application from the next day onwards. But this 2 years, the starting point of this 2 years will not start from the second fresh GST refund application. It will roll back, or it will be applicable from the original, the original application that you filed. So that is again a limitation. 2 years, so that much of time you lose basically. So by the time you get 2-3 deficiency memos, you would have sort of, even though it looks big, 2 years, you would have partially given up and partially time barred in terms of application. So 2 years from the original application, not from the second application, the fresh application. So that is mentioned in the circular. There's no change in the circular. The circular is again clarified. Coming to provisional refunds, as I told you, 90%. The circular says that the officer, please give 90% of the provisional refund if you find it all okay. Because what happens is, a good SSC will file a refund application with all prescribed documents, with all conditions fulfilled, with proof, with copies of all invoices, etc. And the officer will check all his boxes. There's no more boxes to tick, and he says that, okay, why wait for 60 days? I will give you a provisional refund first in 90%, and then later after 10-15 days I'll give you the remaining amount in RFP 06. Also, there could be a case when the SSC is very good and the officer is giving the entire amount in the final phase itself. That is, he does not want to give you 90% of provisional refund because he feels that he does not require more time. You can get the entire amount. So that again happens rarely. As I told you, provisional refund is again a concept in books. I've not seen a single case wherein you have got 90% of the entire claim that you put, within so many days before you get the sanction order. That again is clarified in the circular, saying that, okay, you can give 90%. Please give 90% if the SSC is giving all documents properly. The third segment is disbursements. Now, disbursements is very important because it instructs the officers on how the payment should be done. Like I told you, payment order is a concept, not payment advice. Therefore, the application scrutiny and processing and sanction is by one authority, not by two officers or not by two levels of departments. It is at the single level of department, either at the central level or the state level. But by one authority should do the application acceptance and the processing and the sanctioning of the refund. Now, how this works is you make an application for refund initially. The GST portal created by Infosys sort of has an algorithm wherein they will process the application and forward it to PFMS, Public Financial Management System of the Ministry of Finance, not GST Department, of the Ministry of Finance. It falls under the government, under the I think it falls under CNA, the general accounts something. So from the time you make the application, it goes to PFMS, Public Financial Management System, and the PFMS portal is from where you get the money into your bank account. Basically, the sanction order is passed by the GST officer, but GST officer is not releasing that money. He will pass the sanction order, inform PFMS, PFM from the personnel sitting who are controlling PFMS will release the payment to your bank account, the refund amount. And yes, one more line which I find it only in books: interest at 6% if not refunded within 60 days. Clearly, it is mentioned in the rules. It is mentioned in the section. It is also clarified in this circular number 125 that if the GST authority is not processing the refund within 60 days, then the interest that you have to pay, that the officer should pay and you should receive, is 6% on your refund amount. Again, it's like your provisional refund. I have not seen this interest. There are many cases where clients or SSCs have got refunds, but that is only for the amount that they have claimed. On top of that, like your FD interest, you have not got any further interest on refund, even though they have delayed more than 360 days, more than 180 days, etc. So the circular again says that please, you are liable to pay 6% interest to the SSCs if you delay with beyond 60 days. So they say that to keep up the 60-day limit, you should make sure that you release RFD 06 sanction order and payment order in RFD 05 within 45 days and leave a buffer of 5 days for the payment to be done, right? So in 45 days, you should finish all the procedures at your end, as in the officer's end, and the payment will be done in the next 5 days. That is what they say, 45 plus 5, 45 plus 15, it should be equal to 60. So for 45 days within which you should pass RFD 05 and 6 and all that. And then you have the next 15 days to release the payment from PFMS to the bank account. And if there's a delay, then interest at 6% is liable to pay. So the SSC, when he is delaying in the payment of GST, he is paying 18%, 9 plus 9% of GST. But on the other hand, when the government is liable to pay to you, you're only getting, or you're bound to only get 6%, which again, I'm not seen in any case. The master circular indeed talks about a very important segment called unutilized ITC. Just excuse me. Unutilized ITC, in fact, ITC and unutilized ITC is going to be, I would say, in the coming years, the major litigation area as far as GST is concerned. It's already amounted to be a GST litigation area, but it'll be the first one. You have those litigation areas like income tax, you have 1111. This will be the on the top list, ITC, input tax credit, because the GST department and the government has made it so complex and so difficult to follow that this is going to be an area of litigation. It already is, but it will only get larger. So in fact, nowadays what happens is, more than the amount of GST that the SSCs are bound to pay, they are more worried on the input tax credit that they can avail, that they can set off basically. So that is why this is something which is, and this is what the government is trying to, tap. You have even there is an amendment with respect to ITC in the Finance Act of 2021 with respect to this ITC. And in fact, they have cleared everything, all that confusion which we had regarding 5%, 10%, 2A, 2B, etc., has been clarified with that particular section or rule being inserted in the Finance Act of 2021 under ITC section. So the master circular says that if you want to get your unutilized ITC refund, you need to upload a copy of GSTR 2A. Now, GSTR 2A is something which is available online, but it comes in the form of a PDF, it comes in the form of a JSON. It is not one table that you can view. It is something that you have to download every single month. So 12 months you have to download and then combine it and then upload it. Again, the file size for these GST refund applications is only 5 MB, but the government says that I need the 2A copy. They don't say monthly 2A or quarterly 2A or yearly 2A. You have to basically download 12 months GSTR 2A copies and combine it in Excel or Word or PDF and then upload it. The circular says that whatever are the purchase invoice details not in your 2A, you need to self-certify, signed by the authority liable to file GST return, the director or the partner, self-certify the purchase invoices not in 2A and then upload. Again, basically to get a proof for the government that these are the invoices that they are attesting to be true, which is not in 2A. And then you have the famous rule number 36, sub rule 4, which talks about that 5% restriction of the eligible ITC. Again, that confusion right now, as I speak, is totally gone because in Finance Act of 21, they've inserted one subsection under section 16 of the CGST Act 2017, wherein they have said that they have listed on 4-5 conditions for claiming input tax credit. 1, you should have the invoice. 2, you should supply the goods or services. 3, you should make the payment within so much time. And 4, you should not avail ITC after a period of time, before September, you should avail ITC, otherwise you'll get lapsed. And finally, they've inserted one subsection which says that you can only claim or take ITC which is reflecting in your GSTR 2A. So with that insertion in GST law under section 16, they have got rid of all the confusion that we had regarding how much to claim ITC, how much to show ITC, whether it is coming in 2A, whether it is coming in 2B, etc. They have said whatever is coming in your 2A, right now it is equivalent to 2B. Whatever is coming in your 2A, that is the only ITC which you can avail. Made clear by the Finance Act of 2021. Now, when you go and file your refund application, you will find that the portal automatically calculates and keeps the refund amount, right? You have to insert the amounts for arriving at that refund formula. But in addition to that, if you can see here, there are 3 components. The portal automatically calculates the first one and the last one. The portal, the rule says, or the circular says, that you can claim lower. You see this arrow indicates lower of the 3 components. Either a balance of whatever is your ITC in the electronic credit ledger at the time when you file the refund application, which is the 3rd component here, or that formula I explained, which was quite hard, the net ITC as per that, the refund amount as per that, or this one, that is a balance of electronic credit ledger at the end of that tax period when you file GSTR 3B. That is, suppose you're filing refund application sitting in March, as on April 20th or as on the due date of filing GST return 3B return for month of March, this is the total lying in your electronic credit ledger. So the portal automatically, because everything is online, the portal automatically calculates how much is in your electronic credit ledger at the time of claiming refund, at the time when the return of 3B is liable to be filed, and whatever you arrived by using the formula. The lower of that is what you can claim as refund. Of course, in formula, you have arrived a much higher figure. Logically, in the formula, you will not arrive at the higher figure because it has adjusted net ITC that you should consider. So the lower of the, suppose, let's say that you have as per formula, you have 2 lakhs, but then whatever is in your electronic credit ledger is only 1 lakh. At the time of filing refund application, you can only avail 1 lakh. If you're availing 2 lakhs, you can go ahead. You can file refund application. There'll be a red mark there. And yes, that will be a criteria for rejection by the GST officer, stating this particular circular. Then the circular talks about zero daily supplies. It just gives some clarity. In fact, there was one such situation of a client of ours wherein they had forgot to file LUT. And while we did GSTR 9C audit, we came across export of services without IGST payment. The rule is that if you do not pay IGST, you should take a LUT, file an LUT before export. But they've not filed LUT and they've not paid IGST. So what happens is, I went to this particular circular and I found that there's a particular para number, I guess 7 or 8, which says that even though there's a delay in filing LUT, if you have followed all the conditions of export as defined in 2 subsection 6 of the IGST Act of 2017, and you have followed all the conditions stated in the LUT at the time when you file an LUT application, if you've satisfied all that, then okay, give a letter to the department asking for condonation in the filing of the delay of filing LUT, and you will not be levied with any IGST, or the auditor can be satisfied that okay, the letter has been given and therefore exports without IGST is fine. So for that particular client, I made out a letter. In that letter, I stated the circle, I stated the paragraph number, I stated that there's a procedural lapse, as in they had somehow, although they completely forgot, they had somehow delayed in the filing of LUT, but they have followed condition number 1, condition number 2, condition number 3 as defined in export definition. Condition number 1, condition number 2, condition number 3 as stated in the LUT file, or LUT that was forgot to be filed. So since I made the client, give that letter to the department, in the client letterhead, the department seal or the acknowledgement was received, and that copy we got, and therefore we signed off GSTR 9C. Just covering the risk that yes, the SSC has given an application or a letter for condoning the delay in filing the LUT application for exports. What they say is that in the LUT also it's mentioned that there are some conditions. That is, as if you're a goods exporter, you must export the goods within 3 months, within 15 days from the expiry of 3 months from invoice date. That is, today's invoice date, I get 3 months from today, I get plus 15 days more. Up to which, if I have not exported goods, then you're bound to pay IGST. For services, instead of 3 months, it is 1 year. So these are the conditions stated in Rule 96A of the CGST Rules 2017, which says that if you are exporting without IGST payment, you are bound to file a LUT. In the LUT, you are binding yourself to pay IGST if you have not exported goods within so much time, if you have not exported services within so much time. This is the thing. If you have not exported, when you're doing audit also, you can find out the time limits, and if they have exceeded, if you find that, normally they will export, because otherwise how can they survive? But if someone is delaying the export within after this time period, you can bring it up, right? So this is again clarified in the circular, and it's basically a checklist for the GST officer. Coming to the most 2 important slides, I would say, of this presentation, and we're almost drawing the end of this presentation. The list of documents prescribed. Again, circular number 125/44 bar 2019 GST, date the 18th of November, gives you a list of documents that you need to get it signed by your director or partner in particular formats, and upload it along with GST application refund. If you're only doing an application without any sort of documents, the very next day you can get a deficiency memo. Why not a memo? Even a rejection order that you have not even read the section of the rules and you're making the application. So this circular is very important in terms of it prescribes the, when I read this circular in depth the last month, only then I came to know that, okay, there are so many documents, so many declarations and self-declarations that the SSC should arrange for and upload to get the refund application without delay. Yes, there are situations where we have filed refund application from office without with one or two documents missing. Uh, Still, we have got refunds. So that is depending on the GST officer. In fact, I'll show you a show cause notice of a particular person. That particular officer sitting in the CBI office, the office in the CBI road is very good. He has stated all these documents are required, and it'll take quite some time for the SSC to get these documents for upload. So you have two cases. You have case one, payment of IGST, you're exporting. Case two, no payment, but under LUT you're exporting. Quickly running through the documents. If you are exporting outside India and if you're exporting to CES in both cases, right? First, with IGST outside India, you have to give 1, 2, 3, 4 documents. In that, you have some breakups. You have to give foreign inward remittance certificate as a proof of receipts. You'll have to give a declaration that your export of goods, that is the goods that you're exporting, is not liable for duty drawback and not liable for export duty, because if it is, then you will not get refund. Of course, in the Finance Act 2021, one more amendment has come saying that on goods, even if you get duty drawback, you are liable to get refund of the amount. But as it is, you should give a declaration that your goods are not liable for any export duty or duty drawback, and you have furnished the FIRCs of services. One more thing is, for goods, there is no requirement to furnish FIRC. The circular has made it extremely clear. You just need to furnish your shipping bill and all that. There is no requirement to furnish FIRC as a proof of receipt in terms of export of goods, but not for services. Then you should upload a copy of your GSTR 2A. You should upload an undertaking that you have satisfied all the conditions of ITC. Then you have to fill in a statement which you can get online from the portal, giving the details of invoices as per GSTR 1 versus FIRC detail mapped to each. That is, one invoice, export invoice, should be mapped to one FIRC number because it carries the same amount in dollars. That you have to upload. Whatever the purchase details are not in your GSTR 2A, you have to get that self-certified as discussed before and upload that. A self-declaration that you have not committed any offenses if you want provisional refund, right? So that is also, I think the amount is, you've not committed an offense for more than 2,50,000 in the last 5 years, preceding the relevant period for refund, give a declaration. So you have to give a declaration, you have to give a couple of declarations, you have to give an undertaking, you have to give a statement which can be downloaded online of the invoice in FIRC. You have to give something called as an Annexure B. Annexure B is a purchase. It's a statement, it's a particular format that is prescribed by the rule, by the circular, which gives you a format in which you should highlight the details of the invoices, purchase invoices. I will show you a format of the Annexure B, which is again one of the reasons for rejection of refund applications, right? So you can just quickly go through the documents required on your left side for outside India exports. If you're exporting it to CES, it's slightly different, almost same, but slightly different. You have to get an endorsement from the SEZ officer regarding the receipt. That is, you are giving it to a SEZ unit, you have to get an endorsement from that officer that yes, the SEZ unit has received these goods or services and it is for authorized operation, right? Because the government wants to know that you are exporting this, you are claiming it to be zero day supplies, you're actually going into a SEZ unit. So nowadays, for an SEZ unit, you have to certify online all your purchase invoices. If I'm a CES unit, if I'm purchasing computers, I'll have to get that invoice of the computer certified by the customs officer, by the SEZ officer, and then download the certified copy and then give it to my supplier. So you should ensure that you get that certified copy in the letterhead of the company, signed off by the company director as well as the SEZ authority, stating that it is for authorized operations. Otherwise, straight away there could be a rejection. Also, a declaration that you have not collected any sort of IGST, CGST, FGST from the, or basically IGST from the SEZ unit, that declaration also. And then all others remain the same. You can see a last point here, which is quite new to me. And this can be a scope of work for our chartered accountants. A self-declaration. It is not a comma there. It is basically self-declaration below 2 lakh rupees of refund amount, or a CA certification if the refund amount is more than 2 lakhs. So you are claiming a refund of 10 lakhs. You are claiming a refund of 10 lakhs and your supplies include supply to SEZ. You need to get a certificate signed off by the chartered accountant, for which chartered accountants have to generate a UDIN. If you go to the UDIN portal and if you go to that drop-down box of certificates, one of the certificates you find would be this particular Rule 89, I guess, sub Rule 4 or 5, stating that supplies to SEZ need the certification. See if it is exceeding 2 lakh rupees of refund amount. That could be one area that we should look into, and we can not many units supply to SEZ units, so then the CA certification is required. And if your refund amount is less than 2 lakhs, you basically need a self-declaration that I have not passed on the burden to anyone, and it is a refund amount that I'm claiming because I've incurred the ITC. Right? Coming down, you have the list of documents again prescribed for zero-rated supplies, not on payment of IGST, but on payment of LUT. As you can see on the left hand side, it's almost the same. I'm not paying IGST. I am not paying IGST, and I'm exporting under the cover of LUT. In this case, you need to follow all these. You need to upload all these documents. You have the FIRC. If it is goods, you have the shipping bill, because the GST office is asking you that if you're exporting goods, let's say wood, decorative wood to Dubai without IGST, then you need to furnish the shipping bill, which has approximately how much is the foreign currency amount that is shown also in your invoice, right? Then again, a statement which is same as above, and undertaking that you availed all the, you fulfilled all the ITC conditions as per section 16, copy of GSTR 2A, a declaration that goods exported are not liable to export duty or excise duty, export duty or customs duty, or any kind of duty drawback. Right? On your right side, again, if you're exporting to a special economic zone without payment of IGST on the cover of an LUT, then you need to follow some, these documents should be uploaded. You have again a self-declaration or a CA certificate if the amount is exceeding or greater than 2 lakhs. You have an undertaking that you have fulfilled all the ITC conditions. You also have to have an endorsement, as mentioned above, from the cess officer that it is the receipt is for authorized operation, right? And the declaration that you have not availed or you have not charged GST to the cess on the cess supplier. So, if all these are only obtained and uploaded, will you, along with the GST RFP 01 application, will you only can think of getting a refund clear from the refund order passed in RFP 06. So those are the list of documents. This 2 slides is quite important because again, it's mentioned in the circular. So this will be a guide to you to explain the SSC that you need to get all these documents sorted, signed off, correctly formatted before you make out a refund application. Right. So these are the documents. Now I'll quickly show you the show cause notice, which I wanted to show you. This was basically, yes, it is here. I believe you can see the screen. It is basically a show cause notice issued by the Central Tax and Central Excise Bhavan. Central Excise Bhavan in the CBI Road, Katrikadu. This was basically all, in fact, the majority of applications which have in fact gone to that office, and you have officers who are very busy with these refund applications and registration applications for software export companies. All the infopark companies, all those Kakinad based IT companies exporting software, all come under this, there's I think 2 or 3 officers who are only checking this in the Central Excise Bhavan. This was a show cause notice issued by the Central Excise Bhavan. The GST officer's name is mentioned at the end. This is basically RFD 08, a show cause notice. The step before this is RFD 03, Deficiency Memo. So this particular SSC has filed RFD 01. He would have got the ARN number for tracking in RFD 02. He would have got a Deficiency Memo in RFD 03. He would have got, then he would have filed a fresh RFD 01. He would have got one more deficiency memo or two more deficiency memos in RFD 03. And then, finally, when the officer was fed up, he issued a show cause notice. And that too, he has to keep, he has to, within that time limit of 60 days, he has to maintain it, right? He has to adhere to that. So therefore, he finally passed. It is not a rejection order. It is basically a show cause notice to show cause why you are not liable, why you should not get the refund amount, or why you are, the officer saying that this notice, I have basically printed out this notice explaining why you are liable, why you should not get the GST amount. So in this particular show cause notice, I have highlighted the important facts, and all these audit marks that you can see are the various points for which the GST officer has rejected the application. This again is, I would say, the best show cause notice I've received till date till date for GST, because so many, usually it's only a one-page show cause notice saying that you have not uploaded this document, show cause to me as to why you should not get refund, this is the amount. But no, this guy actually went into depth. He has actually referred all the rules, all the circulars, all the notifications, and he has marked out clearly, as till the latest notification circular, he has marked out all the areas why he thinks this SSC should not get refund. Let's go one by one quickly. Firstly, he says that you have applied for refund for export or zero-rated supplies without IGST payment to SEZ unit. But in your export services, in your export invoices, you are putting a line saying these supplies are liable to IGST. First of all, you're not paying IGST. You are claiming refund under the category of no IGST export to SEZ under LUT. But when you look at your hard copies or soft copies of your invoices, there is a particular line. You are supposed to state that line, whether it is LUT or IGST. You have stated that to be IGST supplied to CES. So the officer has actually gone through these notices in depth, through these invoices in depth, the format, because all the format of the invoice, and again, though many of us, many of the SSCs don't strictly follow the format of the invoice under GST, the officer has actually gone into the invoice and seen that the category does not match with the particulars given in the invoice. Rejection.
Hello, Deepak. Hello, Deepak. Please wait. I think the speaker is cut off. The net is cut off. I think just wait, please. Can
Sorry.
you hear?
Yeah, I can hear you. Sorry for the interruption.
I think.
I'll continue, sir.
Yes, we can continue.
Okay. Right. So I was looking at the show cause notice, and here I explained to you basically the grounds for rejection. Like, if you see, the first ground I explained was the category was not matching with the particulars in the invoice. The second category was the second ground for rejection was that the time limit was beyond the relevant period. The SSC was claiming the refund. The SSC was claiming the refund for the financial year 18-19 for the period October 18 to March 2019. But he has only filed the refund application in on Jan 30, 2021. So what happened? 2 years from the tax period for which you have to file GSTR 3B. If you are claiming a refund for October 2018, GSTR 3B of October 2018 is liable to be filed by 20th November 2018. 2 years from that date is 2020 November, and we are sitting right now on 30th Jan 2021. The officer is saying that since you have made an application on 30th Jan 2021, your refund application is time barred because you have not adhered to that 2-year limit from the due date of filing GSTR 3B. And therefore, I will only give you refund applicable to the months of January and February. This was the second ground of rejection by the GST officer in the show cause notice. Right. Next, what we'll do is we will come to the third ground. Here you can see the third audit mark, that is basically declaration under third proviso of section 54.3 and self-declaration under rule 89 sub-rule 2 clause I. If the amount does not exceed 2 lakh rupees are not found. Like I mentioned to you in the list of documents prescribed attached in that mentioned in that PDF, the GST officer here is saying that you have not uploaded a declaration under third proviso to section 54 subsection 3, which talks about the case where you should get a declaration that your goods are not liable to export duty. If it is, then you can't get ITC. There's no declaration. Also get a self-declaration where you are attesting that the amount of refund claimed does not exceed 2,50,000. If it exceeds, you have to get a CA certificate, mind you, that it does not exceed 2,50,000 rupees, and you have not declared that you have not passed the burden to any other person. These two declarations, one being a normal declaration, the other one being a self-declaration, are not found as a part of your application. So 1, 2, 3. The fourth ground is, I would say, it was very new to me. Only on reading the show cause notice, I came to know there's something like this. And that is basically, you have to now mention, again, it's gone back to that GST not being a simple tax, one nation, one tax and all that. They are saying that you have to mention HSN SAC code of items you purchase. That you have to mention in a particular statement called Annexure B and upload it. Now you would have purchased so many inputs like computers, computers is a capital good, sorry. You would have purchased, small repair tools, stores, packing materials, all are considered inputs. And you have to go and find out if the HSN or the SEC code is available for those items. Declare that in the statement called Annexure B, which I'll show to you at the end in the next PDF, and then upload it. So the government is saying that they want to identify the HSN code of all these purchases. Why? Because they want to know if it is an input or input serves a capital. They are not just satisfied with you declaring it is not a capital good. They want to themselves, by going to the HSN number, check whether the item is a capital good or not. So you have to insert one column in the Annexure B, which I'll show to you as HSN code of all the items purchased. Again, this is something which is near to impossible to, practically it is impossible to get this done. And I would say you file the refund application without this and try to get the refund amount, because if you sit and do this and ultimately not get the refund amount, then you'll be, sort of scratching your heads. So that is another ground for rejection. Actually, HSN SHC code was not mentioned till the notification which came out recently. I think it is notification 134 dated sometime in 2020. So it superseded this notification 125, wherein they said that Annexure B is modified to the extent to include HSN column. Right. So that is again one rejection area. The next one is the officer saying, okay, this ground for rejection is not mentioned in your section, rule, notification, circular. It is the out of the officer's own sort of assessment or scrutiny. Officer saying that you have acquired some inputs which are of high value, and I want to see invoices of that. So again, this could be, you should keep all the invoices ready. The officer feels that here you can see some 6,54,825 worth of inputs purchased on 27 September 2018. How come so much value of inputs purchased, whether it is capital good or not? Officer is asking for the invoice copy. Again, that if you don't have the invoice copy, or if you have not kept the copies in your desk, then this could be one more ground for rejection. It's not over. Finally, the officers, actually, there's one more after this. The last but one rejection caused the officer saying that you have not claimed refund of ITC, which is in your GSTR 2A. It's a common thing. The SSC has gone ahead and claimed whatever is available in his records, but has not checked in 2A. Simple thing. He should have done it before, but he has not done that. The officer is saying that there are 1, 2, 3, 4, 5 cases wherein I found that this ITC is not in 2A, therefore I will not give you refund. That's a common ground. And yes, this is again something which is not mentioned in the GST section, rules and notification circulars. It's out of officer's own scrutiny assessment. The officer said that your turnover as per 3B and 1 does not match. Sometimes it'll be 3B versus 1 versus GSTR 9. So there'll be some SSCs who are not reconciling and filing. Your turnover is not matching as per 3B and 1. And therefore, what you are claiming as your total turnover for the purpose of getting refund, how do we know it's correct? That is again a ground for rejection. And finally, they have said that please show cause as to why your refund claim of 10 lakh, whatever, should not be rejected for reasons stated above. Right. By reading this, we'll say that you keep quiet, don't go and make out a fresh application, don't reply, let just forego that amount. But then there are people who are replying to show cause notice in RFP 09 and submitting all the proof required by the GST officer. Right. So this was a good show cause notice issued by the GST officer. I'll just take 5 more of your minutes in this aspect. I will show you one more PDF. I had actually combined all the references, RFP 01 right up to RFP 06. So that I will just show you now. Yes, I hope you can see this PDF also. This is a format of RFP 01, application for refund. In this, it is a PDF that you get once you apply for refund. Here you can see the ARN number. This is the tracking number that I told that you can get. Here you can see the bifurcation of the amount that you availed as refund. You're finally availed as the refund of 57,322 worth of ITC you're availing as refund. Here in this table, you can see what all documents you uploaded. This was an old one, so this was done by me only, but I really did not follow the circular, and we in fact got the amount also. But I had only uploaded Annexure B, FIRC, GSTR 2A, LUT export invoice. And then one deficiency memo came, if I remember. And then, yes, the next one, luckily the officer was not very strict enough and he gave the refund. But a strict officer like that person from Central Excise Bhavan, if he has to check everything, then no refund applications practically will get processed. Right. The next one is a format of the ARN. I'll just magnify this. This is the ARN receipt. This is what we basically send to clients saying that we have got your ARN number. This is the number that you can file. This is the total value of refund that you may get. Okay. The next proof is basically RFP. Next reference is RFP 03. A common notice. This is a one-page memo that the officer gives. This is a common thing, tomorrow, if I'm filing a refund application for a client, I am filing with the expectation that yes, I will definitely receive a refund memo. I'm open to it, and therefore, I'm waiting for that only. That is RFP 03 in this particular format. You will have this table saying what all are the deficiencies found by the GST officer. Please correct it and file a fresh refund application after rectification of the above. deficiencies. This was again a client based in Thrissur. RFP 06, for the same client, we've got an RFP, like I was mentioning. The government officer, the GST officer passed a deficiency memo 1, deficiency memo 2. In fact, a show cause in RFP 08 also came, if I remember. And then finally, we had replied in RFP 09 and RFP 06. To everyone's happiness and surprise, we got a sanction order. So in this, they have mentioned that we have sanctioned so-and-so of this client. The amount of refund is so-and-so. You have CGST. This is a big amount, in fact, 5,16,000, almost 11 lakhs of rupees that the officer had to 10 lakh, 10 lakh, almost 10.3 lakhs of what the officer had to give from their pockets. And this was again credited from the PFMS to the federal path of this particular client. Right. Here I have given you a format of the statement I was mentioning in the list of documents. I was mentioning, if you can, I'll just draw you back to that PDF or let it be. I was mentioning one statement called statement number 3, in which you have to furnish your invoice details and your FIRC details and match it together. This is that. This is the document details here, matching to the FIRC for services. If one FIRC number is wrong in terms of wrong value, that will be a ground for rejection. So your value that you have, this is a value in INR. Of course, FIRC, if you have a closed look, you will have both the foreign currency and the INR value. This is the INR value, and we have matched it to the invoice, and we are saying, hey, I have got the proof in terms of FIRC for these invoices. And finally, I have the Annexure B. Annexure B, you have serial number. This is basically a statement that you should upload. That is the base. It is the pillar. The first thing that the officer will look at in terms of input tax credit before refunding that unutilized ITC to you. You have serial number, GST number, name. You have the invoice details here. Input or input service or capital where you declare by yourself. This is the new insertion of the column, HSN SAC code, right? This is the, of course, this is the recommendatory format, but you can always shift the columns here and there. HSN SAC code, they have asked you to provide of all the invoices for your purchase, name supplier. You have purchased packing material from your supplier, packing material number A, B, C, D. Please furnish the HSN code. Sometimes in the supplier's invoice, well, it will not be in the format, it will not be a GST invoice, in the format of a GST invoice, but still, you have to take the trouble and find the HSN or the SAC code. What are the CGST, SGST, IGST, and what is the eligible ITC? If it is eligible, yes. If it is a capital good, no, it is not eligible. Whether it is reflecting in your GST or 2A, very important. If it is yes, no problem. If it is no, you're putting if 1 lakh rupees of packing material is not of a particular supplier A is not reflecting the GST or 2A, you should get the self-certified copy of that particular invoice and upload along with refund application, right? So these were the references that I wanted to sort of bring to your concern. And therefore, I've completed my presentation. I hope it was informative. If you want to reach out to me in terms of any doubts or queries, please do so. So let's connect. I have a mobile number, I have an email ID, as well as the organization, the ID, the website of the firm as well. Okay, thank you.
Deepak, I think you can clear the queries if there is anything. I think if anyone is asking, right?
Queries, chat box. I don't see anything in the chat box, sir.
No. I think if anybody is willing to, or ask any question, I think they can ask now. No?
Sure.
Is there any questions? They said it is a chat box. There is one question is there from Shantaram Shanai sir.
Okay.
The client is claiming ITC. You got this client is claiming ITC reflected in GSTR 2B only. As per the circular relating to refund application, we need to upload GSTR 2A to A. Is there any need to reconcile GSTR 2B with the GSTR 2A while filing refund application?
Definitely. GSTR 2B was brought out by a section 64 or 69. 2A is very much in law now. All of us are waiting for a clarification as to what to follow, 2A or 2B. 2B is never mentioned in any application or anything, but internally, yes, we have to do a RECO. We have to, in fact, not only for refund, we have to do a RECO when we file the monthly returns of ITC. We have to sit and reconcile whatever the client has given versus whatever is in 2A versus whatever is in 2B. Right now, with the Finance Act of 21, it is not like they will throw 2A out. The Finance Act 21 is proof for that. 2A is very much there, and yes, you need to reconcile with 2B. The logic is basically 2B is a static form, 2A is a dynamic form. At one given point of time or for a particular month, whatever is in your 2A should come into your 2B. But yes, there is a need to reconcile, and that reconciliation point is still there.
I hope it's cleared. I think any other queries? We have Deepak, we have with us chairman is there, secretary is there, Alan is there. Chairman, you want to comment anything?
Unfortunately, I couldn't join much because I was traveling.
You are stuck.
I don't know how he could very confidently on the topic.
No,
Thank
no,
you so much, Deepak.
It's an
Thank you.
excellent presentation. I think really an authoritative presentation. I think Deepak has done. It's a good presentation, I believe.
Absolutely.
Any other queries, questions? Another more question, Deepak. What is the time limit for assessing authority to consider our reply in GSTR RFD 9?
There is no time limit mentioned by the officer for the officer to give reply. In fact, we have to give reply in 15 days to the show cause notice. But there is no, if you read the rule 91 or 90, if you read, there is no such time limit for the officer to reply in GSTR to RFD 09. The entire process should be completed in 60 days. That is what the rules say. So there's a time limit for us to reply, but not for them to reply.
It's clear, I think. Secretary Sir, Deepak, it is your duty to say a vote of thanks. Deepak.
Yes, sir. I have also been traveling. We had a meeting recently, sometime back. So I couldn't join from the beginning, but I did hear some of his presentation, and it was really, really very informative. I'm sure the entire presentation would have been great. I actually missed this. Thank you so much, Deepak, for joining us and giving this wonderful presentation. I'm sure we'll be able to give you a better opportunity at the branch very soon.
Thank you, ma'am.
Thank you so much. And thank you to all the participants for joining us today. And thank you, Roy sir, for organizing this wonderful session.
I think we need to. Yeah, I think there is something connected with this connection. I think the proper links were not circulated. I think in the email itself. I think it would be much easier. I think that is the one
yes, thing. I'm sure, but we'll be able to bring in more participants very soon.
Yes, definitely. Yes. Anyway, and thank you, Deepak. Thank you, Chairman. Thank you, Deepak, and all for this attending this wonderful session. It was a really, once again, I'm telling you, it's a wonderful session, excellent session presentation by Deepak. I think Chairman, definitely we can consider him for a CP in the future also. Definitely. I think it's
absolutely, sir. Absolutely. Rightly following his dad's footsteps. The clarity which how George sir also brings to each and every topic that he delivers. Yes. I'm sure Deepak is soon to be there.
Korah sir is there. I think he has not mentioned anything yet. Josh Korah sir, are you there?
I am actually here, and I was just seeing what all was happening. Very ably chaired by Roy. That you shared it very well, and I hope whatever Deepak has been saying, the inputs are good enough for the people who have attended.
Yes. So it's very clear. That's whatever presentation he made. It was very clear. That is a good thing. I think which I am I like to mention. Simon, anything more? So I think we will wind up, Deepak. I think thanks to all who participated today. Definitely we'll be coming with more such good sessions and study class meetings. Thank you to one and all. Thank you very much.